Alright guys, what's up? So welcome back to our first weekly update video. So today is the 24th of November. So right now we're going to hop onto this pie chart. Actually we're going to hop onto US 500. So what basically US 500 is basically the SPY futures. So you can see that there's no gap. So this is what we call the market. Alright, so let's dissect what actually happened last week as well. So I'm on my weekly chart and you guys can see we actually have one, two, three, four consecutive red weeks. And that is also true in this as well. You can see that on March this year, the beginning of this year, we had four consecutive red weeks. We had another four, I think it's right here. And also the rest is all 3 weeks. Another four right here as well. So what I'm trying to say is that you can see that we actually bottomed after the fourth week right here, and then the market eventually turned green. It happened almost here as well. It went down slightly lower. It went down another 4%, which is kind of insane. And it did not bottom here as well. Eventually, I think Trump announces the tariff, and then the market plunged even further all the way down here. So what I'm trying to say is that we haven't seen any technical signals that we have bottomed. In fact, at the time of this recording, the market gapped up a little, and then right now it's slowly dropping, it's dripping as well. So, you guys know that we always talk about the VIX as well, because VIX is always inverse of the market. It's basically the measure of volatility and the fear index as well. So let's hop onto VIX. Let's see what actually happened. You can see VIX, this is the day chart on VIX. You can see on Thursday, VIX essentially get down, and then it rises all the way up to the $28 and hit a resistance. You can see that we did draw a resistance right here, $28. This resistance is also what actually it's also the resistance for the 17th of October. You can see after that, we rejected that resistance on Friday as well. So what it means is that on Friday, the market essentially dropped because that's the inverse of VIX. And then on Friday, the market actually went all the way up. So let's understand what's caused the reasons for VIX to actually drop on Friday. So there are actually a few reasons, and one of the more potent reason is actually caused by this. So a lot of people actually price in the fact that the Feds are not going to cut rate on the 10th of December. But then there are rumors that the Fed is not ruling out the possibility of a rate cut. So you can see currently we are at a 3.75 to 4% interest rate. So the probability for a 25 to 50 basis point cut is actually increased to 72%. This was, I think, like 10 to 20%, just like before Friday. And then the Feds released the news saying that there might be a possible rate cut. So this is one of the catalysts that caused the market to essentially rally a bit on Friday, which caused the VIX to drop. So let's talk about game plan, all right? I'm just giving you guys market context, and then we're going to talk about game plan right now. You can see for technology, it's actually much weaker than the market because we actually found support for the market right here at this swing low, whereas technology stocks essentially pierced right through the support and went trading below it. So the reason we are looking sector by sector is because we only want to long stocks that are in the dominant sector. So let's say that if you want to short stock, if you want to short anything, let's say technology stock is actually much weaker than market. So it means that the relative strength for the technology sector is much weaker. So we only want to like short stocks if it's in a weaker sector, you know what I mean. So right now I'm interested in longs because most of the wealth I actually built upon bullish market and long trades. That's why I want to trade, looking for long setups. So I know that technology sector is weaker than the market, so I'm not interested in that. But interestingly, if you go to the healthcare sector, you can see that healthcare stocks, even though the entire market is actually plunging, healthcare stocks are actually trading even above the 20 days moving average. So what it means is that the healthcare stocks are actually rising, even though the entire market is dropping. So if you want to long anything, longing healthcare stocks are actually, will have a much higher probability compared to others. And if I jump into other sectors like the finance, these are much weaker. You can see that the the moving average 20, it even went down below the moving average 50, which it's even weaker than the market. So we're not interested in any finance stock. XLY is the consumer discretionary. It's also much weaker. You can see that it's been forming on the daily graph. It's been forming lower lows, lower high, lower lows. So it's in a downtrend. It's even worse than the market. So if you want to short anything, you need to short stocks that are in the consumer discretionary sector. XLP, consumer staples is even weaker. So you can see it even by just looking at the market structure. I taught you guys this, that higher high, higher low, higher high, higher low. This one you have a lower high, lower low, lower high. So there is actually a divergence. So if you want to short anything, it should be this, any stocks that are in this sector, if there's a valid setup. So you guys can just go through all these different sectors. Then you will see that, how I actually do stock selection and actually sector selection as well. So one of the very good setup that I found is actually ISRG. Just going to show you 1 second. If I close this out, I close the MAs. I'm going to open up my EMA. I told you guys in the video that I use the SMA 20 and 50 to determine the market direction. I'll use these things to filter out the sectors as well. But if I'm swing trading, I'm actually using the EMA, right? So if I go into ISRG essentially is a healthcare sector. I know that its healthcare stocks are are relatively stronger than the market. So I want to long stocks like this. So you can see it's very apparent. It's a classic setup. So it's trading above the EMA 20. There's a low, high, higher low, higher high, higher low, higher high, higher low. So it's retracing back down. Right now, I draw a trend line. I already drew a trend line. I already set at alert, safe. So once the price broke this trend line, I will see the volume. I'll check everything, including my indicator as well. See, it did tell me that I need to check the RVOL. Is it explosive? Is there volume contraction? How is the body candle? I need it to be above 70%. Is there any breakout signal? So I'll use my indicator to check, all right? So I'll talk about this indicator next time in other videos, but right now I'm just waiting for it to break out. I will add a watch list as well into what I will be showing you guys after that. My watch list, I'll show you probably at the beginning or end of the video. I will just slot in. You guys can have a look. But another way of how I did the stock selection is going to show you guys real quick. So one of the ways is that we know that the SPY, if I open this up, is trading below the EMA 20, the SMA 20, and the SMA 50. So when I'm doing my filter, you can see that I want the price to be above the SMA 200, SMA 50, and also the EMA 20 as well. So by just putting this criteria, I will know that these stocks are way more dominant than the market itself. And I even added a sector. I added the two healthcare sector because I only want to long like healthcare sectors. So I think you guys get the point, right? But personally, I'm not looking to be very, very aggressive. I told you guys that I'll be more defensive because we know that VIX right now, it's way above the trending zone. It's at the fearful zone right here. So I only want to be very, very aggressive is if VIX is trading below like 20 or 18, because I know that I will have a much higher probability of the trades actually playing out. So my game plan right now is just to do more position trades than swing trades, because swing trade, it means that I want the trades to play out within like, let's say, 5 days to 10 days, 1 to 2 weeks. Whereas if I'm doing a position trade, I want the trade to play out in like, let's say 2 to 3 months. So I have a much longer horizon and a much bigger buffer in terms of stop loss to allow my trade to play out. So what I want to do, my game plan is to either to find some healthcare stocks to swing longs, or I will do position trades on some fundamentally strong companies like Meta or like Amazon. I'm still in my Amazon trade, by the way. I took some Meta trades for positioning. Even though it looks on a major downtrend, if I go to the daily time frame, you can see that it's a major downtrend right now. It's been plunging ever since earnings. But these companies are fundamentally strong, and I know that when the market did some correction or pullbacks, these companies are opportunities for me to actually buy at a discount. But that is my personal take. This is definitely not a financial advice. I'm not going to tell you what to do and what not to do with your own money. Just telling you my personal opinion, what I'm going to do, my game plan. Guys, I apologize for the bad quality of this video because I'm actually outside right now. I'm in a rush. I'm actually traveling. I'm on my travel setup. That's why I'm in a cafe. It's not the best, but I guess we have to make it work. All right. So the game plan this week is still going to be defensive until we see a very clear signal that the market has bottomed. Otherwise, I'm just going to accumulate slowly in terms of my positions. Meta, Microsoft, Amazon, those fundamentally strong companies, I'm going to buy them in slow chunks. All right.